What is up guys, Gifford here, welcome to another stock market video. Today we're going to be talking about my ETFs and mutual fund accounts, which is on the Investnow, and how they have been going after the March collapse. If you're new here, my name is Gifford and I've started documenting my stock market journey. As you'll soon see, I'm not doing that great, I'm still in the negative, but it's good to see my stock portfolio still going up in value. So just a quick format of the video, we're going to look at my portfolio totals, then we're going to look at information of why I chose index funds and ETFs to start my investing journey. Then after that we'll look at the individual holdings of each of those. So we're now in the computer, so we can see here that the portfolio total is $8,917, so pretty close to 9,000. And overall we can see that I'm down by 300 New Zealand dollars. A majority of that is in my Hatch account, so that is in the US markets. I did some pretty bad trades with the timing of it, so I still like the stocks that I have in there, but if you've seen my other videos, you can see what stocks that I did buy. So overall that's bringing down my portfolio, but my Investnow account, which we'll see, is doing not too badly. So when I started investing, I saw this exact article right here, which I'll put in the description below. And basically it says that index funds and mutual funds are the way to go for new investors. So if we read this here, it says that we will be comparing the cost between the lowest cost fund providers that can be summarized in the tables below. So from this table, we can see these New Zealand providers, which is Sharesies, Superlife, Investnow, Smartshares, and also Simplicity. So this here shows the main reason why I went with Investnow, and that's because there's no setup fee, there's no administration fee, but there is a management fee, which is pretty low considering, and also a buy and sell fee, which is pretty low also. And this article is great because it goes to actual examples of if you were to do investments of $100, $1,000, $10,000, or $100,000, and it gives you all the tables there as you read through it. But moving on. So underneath the performance tabs, we can see how the funds have been behaving. We can see that AMP Capital shares have recovered, and also my US large growth fund has recovered. And the US fund is almost back to zero again, but the New Zealand Top 50 fund is still in the negative. And we can also see the total return here is 5.94%, so doing pretty well. So with this portfolio, my main aim is to beat the bank deposit terms, and as you can see here, the bank deposit terms are pretty terrible. If you have the minimum balances up here of 1,000, 5,000, 10,000, and 50,000, you can see that the 1 year is pretty low at 1.25%. 1.45%, 1.55%. Also with these funds, I'm trying to get the average share market return in the US and the New Zealand. So as we read here, the S&P 500 has returned about 10%, but I think it's a little bit lower than that. And from this table here, the New Zealand top 50 companies over the last 15 years has averaged 10.4%. So the first one we're going to look at is my Smartshares NZ Top 50 fund, which is ticker symbol FNZ. And we're just going to use the Sharesies interface because it's a lot easier to read. So over here at Sharesies, let's just have a read of what it says. It says own a piece of the 50 largest companies listed on the New Zealand Stock Exchange. The NZ Top 50 is an index fund. This means you don't own shares in a particular company, but units in the funds that made up of the 50 of them. This helps keep your portfolio diversified so you don't have to have money riding in the one company. So as we can see, the current value is $2.90, and that we can see the March lows here at $2, and that when I was accumulating it, we can see why I'm still behind on this, because I was buying them at $3.10, $3.20. So the next fund to look at is the US 500 fund, which is ticker symbol USF, and we can see that I'm only behind by $2. So let's just have a read of what it says about USF. Invest in the top 500 companies in the United States. This index is managed by Vanguard, one of the world's largest investment firms. The US 500 fund invests in Vanguard S&P 500 ETF, which is an index fund. This means you don't own shares in a particular company, but units in the fund of 500 of them. This helps keep your portfolio diversified so you don't have to have money riding all in the one company. So as we can see from the graph, it's currently at about $9, and in the March lows, it went down to about $7, and then I was accumulating at about the $9.30, $9.20 mark. So that's why I'm pretty close to where I was before. So my third fund here, which is doing pretty well, which I'm up by about $86, is the AMP Capital NZ Shares Index Fund. So this one's a little bit different because it's not available on Sharesies, but we can read here that the fund aims to provide a return that is closely matching the return of the S&P NZX 50 index. So this is one of my newest holdings. This is pretty much the same as the first stock I had, which is the FNZ. It's just got different percentages across those 50 companies, and basically I bought this one just comparing the two and see how it goes. I can't compare them directly because I started acquiring the FNZ at the beginning of the year, and this one is just really recent, so that's why it's got more gains on it. And the last fund I have is the Smartshares US Large Growth Fund, ticker symbol USG. and this here is my best one, and as you can see it's currently up by $158. This fund invests in a range of sectors, mostly significantly in technology. It also invests in consumer goods and services, the industrial sector and finance. So we can see here why I'm actually up, because it's currently at $6.40, and we can see that it dipped below $5, and then I was accumulating it at about $6 here at the beginning of the year, so it's recovered quite well. So the number one advantage of having these index funds is that my money is spread across a lot of companies, so I'm less likely to lose it. It's much lower risks, but in saying that, I'm also not going to get very high growths, but at least that my money is protected, and if it can keep going and get those 10% returns at the end of the year, I'll be really happy. Anything above the bank deposits, I'm going to be really happy anyway. So my money is earning me money, and it's slowly going up as I put more money into my portfolios. So who knows what the end of the year will bring for these index funds, but I'm hoping when we get there that I can aim for a return of about 10%. Having this kind of fund is because it's just a set and forget. Although the minimum requirements to actually buy on this is $250, so what I basically do is just save up $250 and then pick one of the 4 that I want to buy and keep buying in periodic times. Okay, that's enough for me today. Hopefully next time I can get my portfolio past $9,000. I hope you found value in this. If you haven't already, feel free to subscribe to see more of my stock market journey. Otherwise, have a good day, safe investing, and goodbye.